It was nice to see the market roll over. We'll go over the market data and trades in a minute. We were down about 4,000 on the 200K portfolio, and we made a comeback with our short trades, down only 1,000 on the day and down 1725 on the week. We started on Tuesday during a drawdown, and so we're down less than 1% on the week, and 50K portfolio minus 265 today, similar. Trading one micro of we're actually trading the stock index portfolio 26 now. So let me change that. We went from 26 to 22, or 25 to 22, and now to 26. So we are on our third trading day of trading this live. These are the live trade results. And so minus 1,025 and minus 265. And here are the weekly and monthly results for August 2022 so far. Let's go over the price action. So it's good to see the shorts kick in and trade on this head and shoulders topping pattern. Here's what I'm talking about. There's a shoulder, there's a head, and there's a shoulder. When the market did this last night and then did this morning, it just seemed broke. Just too much to the upside. We were due for a pullback and have been due for a pullback. Let's look at the daily and weekly to put it in perspective, and then we'll go over the trading system signals. So let's go over the dailies, and you can see here it's just been this machine-like buying. We anticipated this pattern would not repeat and it would accelerate higher. I didn't think it would do that this many days. It hadn't really accelerated like I thought it would. I thought there would be an acceleration to these levels, but in 1/3 to 1/2 the time, and it's just grinded away to the upside. Any sell-offs have quick snapbacks, and so the big question is the bear market over. Continues to loom, and the biggest fundamental factor will be the Fed's balance sheet, and that comes out later today. Here it is. I heard it went up this week, and we'll see. I heard that this Fed balance sheet went up this week, and there was a debate on that earlier, saying that there were settlement issues. The Fed's balance sheet is really going down faster than it looks. Just has to do with settlement issues. Hard to imagine. The markets we trade settle every day, so hard to understand that. Another interesting technical factor that I noticed here, a technical analysis, if you look at this low right here, what day is that? May the 20th, and the distance from this low down to here is about 400 points. So it made a new low by 400 points. So the market made this low and then wiggled and then made it a low by 400. And then if you take the distance from here to here, it's about 500. So it moved about 500 points higher than this point right here, and about 400 points lower than that. So 400 down to 500 up if you take this range right here. So it's traded 400 points on this side of the range and 500 points on this side of the range. And so I anticipate that Fed's balance sheet will roll over. It's possible it doesn't. Eventually, and that the market will also roll over when the Fed's balance sheet rolls over, but we'll see. We'll see if that happens. We are flat at the end of the day, and so we will take the trade either way. I like ebb and flows a little better than grinding higher, and so hopefully we get some nice moves here in this market. And so let's take a look at the trades on the day. By the way, we do similar analysis on the S&P. It's a little different pricing. So here is the S&P right here. It made this low on May the 20th. It made this high. It made this low, and then it's come up here. So the market made this range here and here, and then it took out this low of that range, and then it took out that high of that range. So a divergent range, and oftentimes you can see it then move lower once it takes out that range. The VIX is down here in the 20 handle. It's been down in the 19 handle here, and so it hadn't done that for a while. April, I guess, was the last time it did that, and so we're in April time frame. What happened in April? The market, same place, was up here, and this had rallied, and then it rolled over. This rally is much more significant, so we'll see. The liquidity basically has said that we've spent 6 months going down. The bear market is over. Let's just all get together and buy. And so that's what's going on. But it's coming into this trend line. So the fundamental factors will eventually matter. and that's what I'm looking for. And let's look at the trades on the day. So we took the long trade early. We're stopped out. You can see the tick wave was stopped out. Let's look at some of the early trades. 60-minute breakout got long here. The E-mini version, this is the micro version. The E-mini version had another long trade that was profitable and another short trade that was a loser. Now, I don't know why there was that difference. I have to do a deep dive into that. But the total results would have been about the same with one additional winner and one additional loser. The total P&L would be about the same. And so tick reversal had a losing trade, then had a nice short into the close going up on the day. And tick pulse tried to get long. Thought this would be a blow-off rally. These gap ups, they continue to gap up. We continue to see propping price action. We've seen that. We didn't see that today. We traded through that midday low. So the market sold off, and oftentimes it won't go much lower than that midday low, but it did sell off to that midday low. It didn't trade lower than the 3 o'clock low. It made about that 3 o'clock low, not much lower than the 3 o'clock, so it didn't sell down into here, which would have helped our positions that were short. So we talked about a cycle for shorting the market into the close, and this could be the beginning of that because this market is overbought, and so we could see this market roll over here and see some nice short trades as the market can sell into the close. So all this propping up is typically what we see in an up market. We saw this prop up. Market was propped up here on a down day, pretty much propped up here, and it started to prop up here. And it's like, we are eventually due to break through that prop up price action. Oftentimes when you see this prop up too, you'll see a gap down. So you prop up, no gap down, prop up, little gap down, but a prop up, barely. And then, we were definitely due for a down day, probably much more, and wouldn't be surprised to see more selling tomorrow. So overall, our long trades lost more than our short trades, but our short trades made a nice comeback, tick pullback. Went long, stopped out there. Robot 2022, small loss on the day. And we had Parabolic VSD. Nice short trade there. Shorted that rally. Very nice short on that rally. And then we had Momentum Reversal. Nice short trade there. Short trade on the day. So we had 1, 2, 3 strategies that had some really good shorts. Overall, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 strategies that traded. Cobra 3 also lost on the day. And the strategies that were profitable, 1, 2, 3. 3 out of 10 on the S&P. Let's go look at on the NASDAQ. 3 out of 10 on the NASDAQ. On the S&P, Cobra 3 stopped out. Tick Fader just stopped out the high up here. And then we added Momentum Reversal, which paid off. But you see that, a little bit of more of an end of day prop up here into the close. And then you get 60-minute breakout short. First trade was a loser. Second trade was a winner. So 2 out of 4 on the S&P. Glad we had the 60-minute breakout short in here today, and Momentum Reversal, which we've recently added to take the short side. So 2 out of 4 trades on the S&P. Those are the trades on the day for Thursday, August the 11th. Once again, these are the final results. Minus 265 on the 50K, minus 1,025 on the 200K. Making a comeback from worse losses with our short strategy. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.